We're going to look at the S&P 500. Market's taking a pretty big hit. You have the S&P 500. It's getting destroyed. You have the NASDAQ getting destroyed, the Russell. And today alone, you have the S&P 500 down 1.4, the NASDAQ down 1.7, and then you have the Russell down 1.8. So pretty significant days to the downside. Are we getting close to a bounce? Because I'm starting to see a lot of indicators that are suggesting that we're getting very, very close to a bounce. But then you have the S&P 500, which was testing a long-term rise in trend line today, a year-long trend line, not able to hold that bounce. So it's getting very interesting here to see where are we going to bounce at? Can the 10-year yield start to come down? And can we finally get that rally? So I'm going to go ahead and look at the S&P 500. We're going to look at the Russell. We're going to look at the NASDAQ. We're going to look at different bounce levels there to be paying close attention to. Also looking at some of the different indicators that suggest that perhaps a bounce is imminent. So if there is a bounce that's imminent, which stocks would I be looking at to possibly play that bounce with? So that's what I'm going to take care of there. But first, make sure that you guys are liking, subscribing, hitting the notification bell thing so you can get notified of all my future videos and live streams that I do here. First up, let's get going on the SPY here. You have declining resistance here. We tested it, and ever since then, we've been selling off nonstop. So you look at it from a weekly chart, we're looking at 5 straight weeks of pain so far. Yes, we're still young in this week. If we get a reversal, there's a good chance that we can reverse this candle right here, make it green. But so far, not looking good. But you see this white line right here? That's the 200-day moving average. We haven't tested that since March when you had the regional banking crisis. Now we're coming back upon it. Why are we seeing so much selling in the market in general? Well, for one, we have a lot of elevated PEs. I mean, PE ratios that have been through the roof over the course of the past 8-9 months. But when not everything's going perfect, those high PE stocks, they're going to start taking hits. And so the one thing that's not going very well with this market right now is this 10-year yield. 10-year yield, this is reflective of the 10-year treasury. As the 10-year treasuries go down, the yields go higher. This big move right here that you saw in the beginning of September, that's going to be reflected in what you've seen in SPY right here. From the beginning of September, it took a massive hit. It surprises me how high it's getting. Up another 2.5% the 10-year yield is. It's up to 4.8%. This is getting to the point where things may start to break in this economy if it continues to climb like this. Where was it at during the regional banking crisis when it almost took down all the banks? It was much, much lower. We're at just like a little under 4.1. Now we're at 4.8. And yet you don't hear anything about anybody possibly going under, hedge funds capitulating, banks possibly going down, nothing. So I do think that at some point, these things keep going higher. It's going to put pressure on something. Something is going to break. Don't know what, don't know when, but something's going to break. 10-year yield, this is your main driver of why there's so much market weakness. Honestly, it surprises me we're not trading much, much lower than where we're currently at. If you were to look at how well the SPY has held up versus the 10-year, it actually hasn't done a bad job of holding up relative to this huge spike in the 10-year. So going back to SPY, is there an opportunity to bounce? Well, you got this rising trend line here that goes back to October of last year. This is where it was testing it for a solid 4 straight days. And then finally, we gap below it, which is very common to see the gaps below a support level that won't break, especially when you're testing it day after day after day, like what we did over the last 4 days. We break it. Now we're sitting just above the 200-day moving average. I do think that there's going to be an attempt to bounce the market there. Whether it holds is a whole other story. But then with this rising trend line broken, like what are we looking towards for potential support levels? And that becomes the problem. There's not a lot of support here anymore in this market because it made such a huge run up off of the March regional banking crisis. We flooded the market with all that liquidity. I think it was like, like $700-800 billion worth, that there wasn't a lot of support formed along the way. You have a little bit of support right here just below the 200-day moving average, but it gets very scant from there. This is where we kind of broke out here in May. But again, there's not a lot of support for SPY. On the Qs, a little bit different. There's a little bit more action to be watching here. So with the Qs, you have this support level, and it's sitting right there on that support level. Now you also see these 2 yellow lines right here. That's what you would call a bear flag. 4 straight days, it rallied. 6 out of 7 days, it went higher. Didn't go higher by much. but nonetheless, it did manage to eke out six green candles in a 7-day period. But now it's testing the support level here at about 353. Is that going to hold? If the 10-year continues to go higher, I would assume that it will keep going lower. I don't think this level is going to hold at all. You also have this gap right down here yet to be filled. Rising trend line here going back to January of 2023. That's broken. So right now, the line in the sand for the Qs is this white line here. This is a huge level of support. You also have a layer of support underneath. If that level cannot hold, then you're starting to talk about, man, could we actually see 328? Very possible you see 328. I mean, remember, we saw the NASDAQ climb about 40% within the first 6-7 months of the trading year. So can it drop another 10% here? Absolutely, it could. Do I necessarily think we're going to go straight down from here with no bounce? I think there's probably a bounce in the near term here somewhere that could probably add a few percentage points to these indices. But if you would have asked me last week, would we have bounced by now? Yeah, I would have thought we would have seen some willingness to bounce this market. The Qs did get a little bit of a bounce, but this is a very meager bounce here. The only thing that was impressive about it is the fact that it was 4 straight days against a rising 10-year yield. You're looking at the bonds. Bonds are going to go down when the yields go up. This is capitulation here, guys. I mean, we're looking at some pretty bad things here. This support level, this goes all the way back to 2002. Basically, as long as I can chart this thing, it goes back to 2002. This is a monthly chart. It's held it every time that it was tested. Then we went on this epic run on the bonds, and it goes from 180 down to 85. Loses half its value for the 20-year Treasury bond fund. So guess what? Now we're at or slightly below this key support level. This becomes a huge, huge market or problem for the bonds. I mean, this is where capitulation is taking place because a lot of these people who are buying these long-term bonds, they're not expecting for this kind of price action when they were buying them. This was like beyond worst case scenario probably in their analysis. So now that we're down here, what is going to break and when? And that's really what I'm watching for. I've been very nervous about getting on long setups here. If I do it, I'm taking gains aggressively. If I'm up 2-3%, I'm going to be taking some partial profits for sure. I even got into Apple last week. I think I held it for about a day. Market started falling apart again. I took a 0.3% profit on it. Better than a loss, but it wasn't much. And so tempered expectations in a market like this. You want to make sure that you're dealing with capital preservation as a mindset. Looking at VIX here, how far could the VIX go? VIX has some room to run here, guys. If you go back in time, going back to about 2021, there's been this consistent level of support for the VIX. VIX has constantly bounced off of this level. Then it broke through it back in April of this year, went back down, formed a double bottom. We got a nice little double bottom here, consolidation. Now we're getting a breakout. We're back above that major support level, something that we weren't able to do in August when we tried it. And now we're starting to talk about, if we continue to see further downside, is a push back to 31 in the cards for the VIX? Very, very possible, especially if something breaks. I would expect a surge to 31. And that's where you may see that resistance kick in, just as we saw all throughout 2021. This was a heavy, heavy layer of resistance here that goes all the way back to the late 2020. T2108, this is another chart that I want you guys to take a look at here. This is percentage of stocks trading above their 40-day moving average. 16% of stocks are doing that right now. When we're starting to get to levels that haven't been seen since March, again, the regional banking crisis, October, where we got into single digits. When it gets into single digits, that's usually the time where I start looking at adding some new long-term positions. That's the time period that I really like for doing that.